right. With me on the show today is Leslie Camus.
Hello,
And
everyone. Leslie
Man,
Camus.
Leslie, yeah, born in California, beautiful Long Beach, and now she's in Texas. I don't know. A lot of people moving to Texas. You
Yeah,
know,
it's not
you
as nice here, but it'll do it.
so which part of Texas do you live in?
I live in Dallas County.
Oh, Dallas. Okay, I've been to Dallas many times. That was pretty flat, right?
It is so flat, and coming from like where we live next to the beach and can go on hikes on the hills and stuff, it is very flat here and very hot in the summer.
But a lot of people move in Texas, maybe because of political ideas and also taxes and all that kind of stuff, right? What
Yeah.
made you move to Texas?
So my mom and my stepdad actually live here, and when I graduated school, I kind of didn't know what I wanted to do with life, so they kind of guided me, and I ended up loving it out here. So I was always planning to move back to California, but I ended up staying, and I think it's just a cheaper way of living. It's more convenient for me.
Okay, cool. Yeah. So you're not alone.
Yeah,
You
not
are
alone.
not alone. You know that
Yeah.
Michael Jackson song? Maybe we should sing that. Anyways, so today we'll talk about mortgage loans, right? So basically, you just graduated and you're pretty young and you went into the mortgage industry. What attracted you to the mortgage industry?
Um, you know what? I think what attracted me is that we're really kind of helping people. I think it was just interesting how the mortgage industry works. And coming into it, I was completely blindsided. I had no idea what I would be doing. I honestly didn't even know what a mortgage was.
Oh,
And
you
kind of
did
just
not?
like, yeah, like kind of just going into it and listening to my peers and them being on the phones and that satisfaction feeling like when you're helping, borrowers and people become homeowners. I think that inspired me. Um, yeah, I think that's mainly what inspired me, and just feeling like you kind of have a place where um,
Yeah. So you
you're
helping,
appreciated and you can
yeah,
help out.
exactly, helping people achieve the generational
Dream.
wealth. Okay, so
Yeah,
basically this it starts with their home. It's part of the American dream, right? And so
exactly.
most people cannot afford to buy a property all cash, so they need a mortgage, right? So with
Yes.
a mortgage, therefore, they can buy it, they can start. And then the mortgage thing is they start with very little, they put very little down, and yet, okay, the bank risks more or the lender risks more. So, for example, you're buying a property $500,000, especially in California, you can buy that property with no money down, right? Somebody gives you
Yeah.
$500,000. Now, as the market goes up, maybe 3 years from now, that property becomes 700,000. Somebody gave you 500,000 at an interest rate of 3%, or now 6%,
Yeah.
and you're not risking. Now, let's talk about your products, your loan products. What kind of loan products
Okay.
does Equity Prime Mortgage provide?
You know what? We provide a lot of nice mortgage products to help people become homeowners. And the first one I do want to talk about today, which I think is very cool, and it's going to be our Empowered DPA, so our Down Payment Assistance Program, FHA loan. And this program is really cool because it actually does open up the door to many potential homeowners. So, whether you're a first-time home buyer or a nurse or a PTA mom or even a firefighter, this program has really helped so many people, who struggle saving money, and can also kind of get stuck in the rental process, feeling like they're going to be renting forever. So this program really does help them out a lot. Um, and more importantly, why I think this program is great here is because we have a process that is more streamlined than any other down payment assistance county program. And why is that, you ask? It's because we are the administrator. So that's meaning like, we don't have to go to the other county or a second entity to get the borrower approved. We do it all in-house, and we look at it ourselves. And not to compare like other county programs such as CalHAFA, those are great programs. But the problem I'm seeing is that, sometimes it gets a little difficult when it comes down to it for the borrower to be eligible for the program. And then on top of that, they're going to have, a silent second that they're paying interest on and things like that. This program that we have here, you don't have to worry about any silent second, no prepayment penalty. So the homeowner is not going to feel like they're stuck with the loan.
Interesting. Okay, so I want to know details about this program. Is it okay, so you have a first mortgage at 96.5%, and then you have a second mortgage at 3.5% or 5%. What is it? Or just a gift?
How I try to explain it is, think of it like a gift. There's not going to be any second at all. It's kind of as if they are getting a gift, because they never have to worry about repaying that or waiting a certain time for it to be forgiven. Because there's some county programs like they have to wait 3 years and then they're forgiven and they don't ever have to pay that back. With us, they never have to pay it back or wait. And it's kind of has a higher fixed interest rate on this program. But I think it's worth it when, there's nothing really tying you down.
So higher interest payment on the first. If the second, you say you don't have to pay it back, you don't have to wait. So you have a high interest rate on the first mortgage. Is that correct?
Yes, but I will say it's not a higher interest rate than the rates that we're seeing.
I see.
Like, it's not something ridiculous.
I see. Okay, interesting. Mm-hmm. So, and you're saying that basically you guys are the administrators, so you don't have to go to a third party. So let's say I have in California, for example, where I live. Okay, the high balance right now is $1,089,000. Okay, the market is still very competitive here. The rates, the values have gone down a little bit, but not too much, because you don't have a lot of inventory. You don't have inventory at all. So if you're representing a buyer, okay, good luck to you. Is this program you're talking about, is it for high balance? Does it support high balance as well? Or is it just conforming?
Just conforming.
Okay. Mm-hmm. So I think the conforming rate in California right now, it's about 756, around that.
Yeah.
So if we find a property that's 756 in the county where the buyer is, then you'll fund 100% of it. Is that correct?
Yes.
Okay.
So they wouldn't have to come out with any down payment. Mm-hmm.
Mm-hmm. Good luck if they can find a conforming property. This is crazy.
Hey, it happens.
So let me tell you that. Let me ask you this. In this program, is this more, I would say, more appealing in areas with conforming loan limits, right? Because
yeah, I would say so. A lot of the loans that I work with are in California or in Florida, and those high conforming areas, and it's very attractive there.
Mm-hmm. Interesting. All right. So what will be the qualifying criteria in terms of FICO scores then?
So this FICO score, we would need a 620 minimum FICO score.
Oh, 620. Okay. But I also saw your email talking about 580 for FHA, and then even 500.
Yeah. So let's say they don't, they're not maybe looking in particular for down payment assistance. We have standard loan programs that go down to a 500 FICO score. And that'll be our FHA and our VA programs. And, with that, it shocked me as well, but it makes sense because, there's so many borrowers out there. They have families, children, school or sporting events, and they still hold on to a great job or career. However, just don't understand the whole FICO score game. And that's where we come in again. We're able to help out these borrowers who have a lower FICO score and kind of see what their best options are. One thing we love doing here for our loan officers is educating them about manual underwrites and what to be looking for. And, if something doesn't work, what are the other options for the borrower? Like it has come to my surprising that there are, just borrowers out there who need some help, with their debt, a cash out refinance under, so let's say they have like a 550 FICO score and they're looking for that cash out refinance to help them pay their debt, get caught up. That's what we do here. And that's what I think kind of makes EPM stand out.
So in that case, let's say borrower has a low FICO score
Mm-hmm.
and they wanted to cash out refinance. Are you going to go more than 80% of the loan to value, or where are you going to stay at?
So we utilize the real guidelines here on our FHA and VA loans. Meaning no overlays on our side, as some other lenders may have overlays. And the FHA rule is 80% LTV on cash out. So we're not able to go more than that just because we're utilizing the real guidelines.
Right.
Yeah.
Okay, and so let's say borrower has a FICO score of 580 and as a purchase, right? And is, let's say, high balance. What would be okay, are you going to still fund them 100%, or are you going to stay at 96.5?
We'll have to stay at 96.5 because, our down payment assistance, like many other county assistance programs, does have certain eligibility requirements, even though it is a FHA loan. So we'll still stay at the 96.5 for them. But on our program, it's just a little bit, I think it's less complicated to be eligible for our down payment assistance program than others.
Okay, so we're talking about down payment. Down payment assistance is it's at 620 minimum.
Yeah.
But okay, let's say someone has lower than that, 580, then you require a minimum of 3.5% down. Is that correct?
That is correct.
How about if they're down to 500? For
Down
FHA, what is it?
Yeah, so if it's under a 580 FICO score, we would require 10% down.
Okay, and VA, you talked about VA, they can be as well as 500. You'll fund 100% of it.
Yes, so VA will do 100% LTV as long as the FICO score is 500 or above.
That's interesting. So, so VA 500 and above, and then what will be the DTI? Does it matter?
So you know what? VA doesn't technically have kind of like a DTI limit, only when it hits manual underwriting. So, as you know, if you get an approved eligible, I had one the other month, a lower FICO score, I want to say around 560, got an approved eligible somehow on AUS findings, and then they had a back-end DTI of like 60 something. And since we go with the findings, whatever the finding says, we don't manually downgrade it at all. So, it really just depends on the findings. If it does become a refer eligible and we have to manual downgrade it, there is a DTI cap, I think of, it just can't exceed 50%. And if it does, then we would need compensating factors, 41%, something like that. But, it's workable.
Okay, cool. That's great. So basically, if I understand you correctly, it means that if somebody's looking for a down payment assistance program without all the hassles, and somebody has a realtor listen to this, or a borrower listen to this, and they have a FICO score of 580, okay, then basically, they can get funded. And if they have a client who has a FICO score of 500, okay, as well as 500. And then VA, they can still get funded 100%. So it looks like this is your niche. And basically, this will really make you guys stand out, especially for government programs. So when it comes to any other programs, like maybe conventional jumbo non-QM loans and stuff like that, we can go to Rocket, we can go to all these guys. But when it comes to,
wait, I'll stop you there really quick, Paul. Because, hey, no. We take conventionals here all the time. It's just, it's so hard to stand out with conventional. So that's why I'm saying, the lower FICO scores with FHA and VA, even USDA, is where we stand out compared to other lenders. Because any lender can do a conventional program.
I know.
Yeah,
That's what I'm saying.
exactly.
That's what I'm
So
saying, Leslie.
don't count us out on the conventional
I'm not
part.
gonna count you out, but you see, like I gotta find a niche. Everybody has to find a
Yeah,
niche, okay?
that
So
is,
because
you're
I
right.
work with so many lenders, I work with so many lenders and say, oh wow, okay, if I go to Rocket 580, they won't take it, okay? Even 520, they'll think twice, right?
Yeah,
And they wouldn't touch 500 for a VA. But I know now, okay, who to talk to, and that's why we have this interview because otherwise, why would I be talking to you? I get so many solicitations from AEs, right, every day. And then okay, every day they send me something. But you stood out and say, okay, I need to interview this girl because, she said, she's telling me 500. Because, for example, we're working with a VA, there's two brothers, and their FICO was less than 600. We can do a Rocket. We can do with Raymond. We can do it, so we have to rapid rescore them,
yeah,
but if I had known you, I would say, okay, listen, I'll go to her. So basically, now this video is about exceptional cases. Okay, exceptional
exactly.
cases. You have a VA, you have a FHA, you need down payment assistance. Okay, without the overlays and all that kind of stuff. That had hassle. You got a credit score of 620. I'm going to bring that person to Leslie. Okay, down payment assistance. Okay, for example, let me tell you, the state of California had this $300 million program that is set aside, and everybody's calling me about that. Come on, $300 million will be depleted in no time. Okay, talk about those people that it's like a lottery. Okay, your case is not a lottery, right? The money is there, so it's there forever or whatever. It's there for the time being.
Yeah,
Okay, so somebody has a FICO score of 620 and they need down payment assistance. Okay, and their loan is conforming, then I bring them to you. Okay, and yeah, and then if somebody has a FICO score of 580, and they need FHA loan or even a conventional loan, I bring them to you, right? And they put down some money. Somebody's a VA and they got stupid FICO 500 plus 500. Okay, they can still avail themselves to the American dream.
exactly. And you know what? Another thing I want to mention on what makes EPM, what I feel like it makes us different is that, usually there's a sales side and an ops side, excuse me, a sales side and an ops side.
Yes.
We don't really think of it like that here because we're all working together to try to help the bar with whatever we can. And what I mean by that is you're able to talk to our underwriters. If there's something going wrong or you have a question and maybe I don't know the answer to your question, our underwriter is going to help us, be more knowledgeable and try to help out the borrower in any way that we can. So, that's just one of my other comments that I wanted to make. But everyone works together here.
That's awesome. I appreciate that. So are
Mhm.
you saying that we can actually come to you for TBDs, right? To be determined. So, for
Yeah.
example, before the buyer or the agent goes out and looks for properties, we can actually say, here's a scenario. What do you think? We can underwrite that file even, and so that when we make an offer, the loan contingency is removed, right? You see that?
Yeah. So we actually do allow TBDs here, although the turn times on those are a little bit more longer than putting in a regular loan. But that's where I come in. I was trained to be able to pre-underwrite a loan and see if it'll get accepted or if there will be any issues with the loan. And because of, my relationships with our staff here and our underwriters and our internal team, if I don't think something is going to work, I'll double check with them, so that we don't really have to put in a TBD. But if you still want to put a TBD in, that's more than doable. I'm also just trained in a way where I can already kind of eyeball and call it to see if it'll work or not.
Okay, so we talked about your specialty, but now maybe you have some other things like non-QM loans. Is you guys do those as well?
Yeah, so we actually do. We do DSCR, 12 or 24-month bank statement, and we do 1099 programs. Um, I personally don't do much of them myself, but we have a dedicated non-QM team, who takes care of kind of like the whole file and are the ones, obviously they're underwriting it, but whenever I have any questions on something I'm unsure about, just because non-QM can get a little tricky, they're always available to help. But we
Okay,
do
thank you
those
so
loans
much.
as well.
Yeah, maybe you can interview that person next time.
Yeah, we are so
Leslie,
down to.
are there any parting words? Anything that I didn't touch on that you want to touch on today?
No, I can't think of anything else in the moment, but happy Cinco de Mayo to everyone out there.
Oh yeah, you're a California girl, so you know that.
Yeah, we like to party.
Okay, happy Cinco de Mayo for you too. Or to you too.
Awesome. Well, thank
It's a
you so
pleasure
much,
talking to you.
Paul.
Yeah, my
Thank you
pleasure.
for having me. I love getting to talk to people about all this stuff. I love getting other people's insight. So I really enjoyed my time talking with you today. Um, don't forget to always ask me if you have any questions. I'm always here to help.
I'll post this on social media, you know that. So you'll be popular on LinkedIn
Yeah,
and
let me know. I'll
YouTube.
post it too.
Yeah, exactly. We'll do that. Okay, cool. Thank you, sister. You have a good one. Happy weekend.
You too. Have a great
Okay.
weekend. Thanks,
Okay.
Paul.
Bye bye.
Bye.